Market at day's lows. The stock slipped despite strong overnight gains in the US and green ticks in Asia. Industrials and utilities lead the slide while IT shows resilience. Reliance Retail is all set to acquire Metro AG's India cash and carry business in a 2,850 crore deal. The move will enhance Reliance Retail's physical presence and bring a large number of kiranas and wholesale customers into its fold. Ajanta Pharma gains following a small stake sale by promoters is well absorbed, while Bandhan Bank slips after planned transfer of bad assets fails to enthuse investors. Kalpataru Power and JMC projects swing after the NCLT approves their merger. And hybrid immunity puts India on a strong footing against a new COVID wave, says experts, who add that nothing has changed in India despite a surge in Omicron cases in China. Minutes of the MPC showed the RBI Governor Das and Deputy Governor Patra see the need to do more to bring inflation to the 4% target, while external members Verma and Goel call for a halt to rate hikes as the growth may be hit. Good afternoon and welcome to Business Lunch. I'm Sonia Shenoy, and in the next half an hour we'll tell you about all the top headlines in the market. For now, the market is still trending lower. That has been the case through the course of the day. The Nifty is closer to the lowest point of trade, hasn't managed to recover at all. It's a mix of factors. For the last couple of days, there are COVID fears that have resurfaced globally, and that has put a bit of pressure on the market. For our own market as well, FIs have been selling in the last few days, and a total of 9,000 crores has gone out from FIs in the month of December so far. Added to that, a couple of pockets that deserve mention this afternoon. You have commodity stocks that are under quite a bit of pressure, the likes of Tata Steel, there's capital goods like L&T, there's auto stocks like M&M that are all the top losers in trade, and financials are also losing a bit of their sheen. Bajaj Finserv is down almost about 3% odd. The mid-caps are bearing a deeper brunt this afternoon. The mid-cap index is down more than 1% odd. In fact, it's almost a 400-point slide on the mid-cap index. But let's get straight to the top stories now. Reliance has announced the acquisition of global food wholesaler Metro AG's India cash and carry business for a sum of over 2,800 crores. Mangalam is standing by the big wall to tell us more about this deal. Mangalam, over to you.
Well, the news is official now. The company has informed the exchanges of them purchasing Metro Cash and Carry's India business. The deal was struck at a value of 2,850 odd crores. A little about Metro Cash and Carry. Of course, it's the Indian subsidiary of the global leading international food wholesaler. It entered India in 2003, and it was the first to introduce the cash and carry business to India itself. Where do the metrics for that company stand now? They have 31 large format stores. FY22 revenue was close to around 7,700 crores, and they sell to kiranas and other small businesses as wholesalers. And this is where Reliance sees benefits. The biggest benefit they get, they further strengthen their physical store footprint. They give access to a wide network of Metro India's stores in prime locations. But importantly, they also get access to a large base of registered kiranas and institutional customers and a strong supplier network. And that exactly has been the case for Reliance, where they're eyeing the entire ecosystem. Analysts are looking at the scalability and synergies in this deal, and importantly also eyeing whether there would be any horizontal or vertical expansion of Metro Cash and Carry, which currently is into wholesale. Can it actually go ahead into retail or not? And that will be important because Reliance recently launched their FMCG brand Independence with a wide array of products like edible oils, pulses, grains, packaged food, etc. And it's this ecosystem that everyone is playing on. The Independence brand, of course, first launches in Gujarat, then scales nationally, and this asset will be important for them to scale that business nationally as well. They've been growing through acquisitions and tie-ups. This year itself, there was brands like Socio, Campa Cola, Pret a Manger brought by Reliance, and this over and above the near 10,000 crore investment that the company did in FY22. And of that, some of the important ones included the likes of 7-Eleven, Just Dial. We had a bunch of designer brands that came in, and Dunzo too. So what does all of this mean for Reliance? The big, the big ambition that Mukesh Ambani had given in the annual general meeting, saying that Reliance Retail will become the largest segment within the group. The company goes ahead and puts their money towards acquisitions. 2,850 crores for a 7,700 crore rupee sales brand. Metro, not particularly bad. Analysts would just eye scalability and synergies.
All right, thanks a lot for that. So that's the big acquisition coming in from the Reliance Retail segment. Well, the minutes of the last monetary policy meeting have shown deep divisions within the 6-member panel. RBI Governor and Deputy Governor remain cautious and warn against a premature pause in policy action. External member Jayant Verma says that the current policy rate and stance can damage the growth outlook, while Ashima Goyal calls for a neutral stance. Lata, in fact, spoke to 3 external members of the MPC. Here is her report on the minutes and the divide within the committee. Lata, over to you.
Yes, it was a deeply divided MPC committee, but the conclusion can be that the Hawks are outnumbering the Doves at this point in time. Key takeaways from each of them. Governors said that very clearly battle against inflation is not over, and the target is to, loosening prematurely is harmful, and the target is to get to 4, not just under 6. Deputy Governor Patra was perhaps the most hawkish, saying that core CPI doesn't look like falling off 6 for some time now. And even headline CPI for the next 12 months looks like lingering between 5 and 6, a distance away from the target of 4. The other RBI member, Rajiv Ranjan, said that core CPI is at 6 in spite of fuel falling. So you can imagine ex of fuel, things are bad. But he had struck a dovish note when he said that growth may be the bigger concern in 2023 all over the world and in India. Dr. Bhide, the external member, was also somewhat cautious. He said growth and inflation are presenting a mixed picture. It would be a bad outcome to underperform on both. So let's stick to the mandate and try to get inflation lower to target. That was the crux of what he said. The dovish member was really Jayant Verma, who said that growth is very fragile. The hikes we take now are going to impact growth further later on, and therefore will damage growth at a time when the global economy is also slowing down. Voted against the hike, and also said that the inflation forecast of 5.4 is suspect because it's based on a crude of $100. Crude is not $100, not in spot, not in futures, he pointed out. Ashima Goyal also struck a dovish note, said that inflation expectations are coming down, inflation rates are coming down, global commodity prices are coming down, and therefore even the pressure on the rupee is coming down, she pointed out, and therefore the need now is to give growth a chance, allow the credit drought to end. Sum and substance, one member, Patra, clearly hawkish. Governor Rajiv Ranjan and Bhide could be termed as middling, and Verma and Goyal clearly dovish. So I would say the hawkish tone clearly surpassed the dovish tone.
Okay, the hawkish tone surpassed the dovish tone. Thanks a lot, Lata, for that. Well, moving on, the Parliamentary Committee on Finance has red-flagged anti-competitive practices of big tech companies and has called for an ex-ante framework legislation and identification of players that can negatively influence competition. Let's find out more on this. Parikshit Luthra, my colleague, has more. Parikshit, over to you.
Well, very extensive consultations have taken place at the level of Parliamentary Committee on Finance, headed by Jayant Sinha. We have seen stakeholders such as Amazon, Google, Flipkart depose before the committee, members of the Competition Commission, leading law firms from India. Experts have deposed before it. Smaller tech companies, domestic players from India have also deposed before the Parliamentary Committee. And what they are now recommending is an ex-ante framework, which is an additional legislation apart from the competition law. The panel believes that the competition law does not have enough teeth, enough mechanism to check anti-competitive practices in the tech space. Some of the big tech companies have a strong position to monopolize, dominate the market and eliminate competition, startups, innovation and the newer domestic players in the market. So they have said that we must have a predictive law framework. We must identify companies which can negatively influence the market well in advance, and those companies must be forced to follow anti-steering, net neutrality, platform neutrality provisions. They must not use any data in competition which is not publicly available as well. They should inform CCI or CCI and the government of any mergers and acquisition or market concentration that they are going to take up in the days to come. They have also identified 10 areas which the government and the CCI must watch out for when it comes to anti-competitive practices. But they are urging the government to look at the EU example when it comes to the Digital Markets Act and probably implement some of the best practices from there in Indian law. But net-net, they're asking for an ex-ante legislation to regulate digital markets and to make sure that domestic players are not affected.
Okay, thanks a lot, Parikshit, for that. Well, moving on, the race for debt-ridden Reliance Capital has reached its climax, it seems. Torrent Investments has emerged as the highest bidder, with Hinduja being the second highest. Ritu Singh is here with all the details. Ritu, over to you.
That's right. The e-auction for the sale of Reliance Capital under the IBC has concluded, with only 2 players coming forward to participate in this auction round. We've been given to understand that Torrent Investments and Hinduja Global were the only 2 players to participate in the bidding, and the other 2 suitors that were in the fray, which is the Piramal Cosmea Consortium as well as Oaktree Capital, did not participate in this e-auction round. That said, we've been given to understand that the highest offer has come in from Torrent, which has offered 8,640 crore rupees compared to the base bid amount of 6,500 crores which the lenders had set. The second highest offer has come in from Hinduja Global, which we understand has offered 8,110 crore rupees. Of course, these are only the headline numbers. We'll have to see the fine print to understand exactly how much lenders are able to recover. But even with the headline numbers, the write-off will be upwards of 70% for the financial creditors of Reliance Capital. Now, we've been given to understand that these 2 bids will be evaluated, and when the final voting takes place on the bids, all of the bids, including those from the Piramal Consortium and Oaktree, will be considered for the lenders to finally decide on who the winning bidder is going to be. Of course, the larger the recovery prospects, the more favorably the bids are going to be viewed. The next meeting of the Committee of Creditors is slated to take place later this week to review these bids and assess their legal eligibility.
All right, Ritu, thanks a lot for that. Let's slip into a short break then. The government has reviewed COVID preparedness in the country as cases spike in China. More on the same after this short break. Stay tuned. Welcome back to Business Lunch on CNBC TV 18. Let's now focus on the COVID scare emerging from China. Cases continue to soar after the government has withdrawn its zero COVID policy in China. Yesterday, the Director General of the World Health Organization said he was very concerned with the increasing report of the severe disease from China, and he's also appealed for more information on hospital facilities and intensive care requirements. In a bid to slow down the virus transmission, the health body has also advised Beijing to speed the process of vaccinating the most vulnerable. And rising COVID cases in China have also put authorities in India on high alert. Yesterday, the Health Ministry held a meeting to review the state of COVID preparedness in the country and issued an advisory asking the public to mask up in crowded places and urged states to conduct genome sequencing of positive samples to keep track of emerging variants. The government of Uttar Pradesh also held a review meeting earlier, and the Chief Minister has issued orders for face masks to be worn in crowded public places. Positive samples will also be sent for genome sequencing, and he has also instructed health workers to increase testing and vaccinations. Maharashtra Chief Minister Eknath Shinde will also take stock of the COVID situation in the state later today, while Prime Minister Narendra Modi will chair a high-level COVID review meeting at 3:30 p.m. later today. Well, just a short while ago, the Health Ministry has clarified about a message that is circulating in some WhatsApp groups regarding an XBB variant of COVID-19, saying that the message is fake and misleading. So I urge all our viewers, investors and stakeholders to not follow any of these messages, to not indulge in any panic situation. The government is being very proactive as far as COVID management is concerned, and let's just abide by the protocols. Well, earlier today, we also got in touch with the microbiology professor, Dr. Gagandeep Kang, who echoed our views, saying that India could have the advantage of hybrid immunity and it may not be necessary for everyone to mask up once again. Also, there is no need to panic at this point in time. Listen in.
You know, this idea that everybody must suddenly start to mask up is, I don't think, completely appropriate, because I think we have to think about why we want to wear masks. And certainly for people who are vulnerable to protect themselves, it's important to wear masks. In India, we have the advantage of hybrid immunity. We have experienced all the waves of the virus, but there are 2 specific aspects we need to consider. One is that this is an Omicron variant, which in general is not as bad as the Delta variant.
All right. Well, also an alert for all our viewers right now. Health Minister Mansukh Mandavia will be briefing the Parliament at 2 p.m. on the COVID situation in the country. So do stay tuned in for that. And once again, you can raise your protocols and get your masks in place, but please do not panic. Moving on, 2022 saw some of the most high-profile mergers and acquisitions dominating the deal space. The year gone by was marked by some much-awaited bailouts and landmark deal closures. It was also the year M&A activity in India defied expectations. Our colleague Nisha Poddar gets us a deep dive on all that's hot in 2022.
The year 2022, as it comes to an end, has clocked in deals worth $118 billion so far, majority of which came in from the mergers and acquisitions space, while private equity also participated with $33 billion. Now, in terms of the sector breakup, well, top 5 in M&A came in from first the banks and financial services topping the chart, followed by other sectors like manufacturing, IT, renewable energy, as well as logistics. Now, the private equity investments were highest in the e-commerce space in the year, followed by other sectors like media. We saw a lot of interest, infrastructure, energy, as well as the financial services. Let's also take you through the top 5 deals of the year. HDFC and HDFC Bank's mega merger clearly is the largest, boosting the overall deal value for the year. And the second one is Holcim Cement Assets, Ambuja, as well as ACC. And that was the most hotly contested battle amongst various conglomerates, won finally by the Adani Group. Now, Biocon's acquisition of Viatris's biosimilars business is also path-breaking in the context of an overseas acquisition done by an Indian company. Fourth on our list is the global steel giant ArcelorMittal's acquisition of Essar Group's ports as well as power assets, critical to its steel assets, which, remember, marks the full and final completion of the Essar Steel's buyout via the IBC process, which, remember, has been a very long-drawn deal. So that comes to an end now. And last is the Yes Bank equity deal by private equity firms Carlyle as well as Advent, which, remember, is an important milestone in Yes Bank's bailout plan. Now for the year ahead. Most deal makers are cautiously optimistic about the deal activity, and consolidation could be a big theme play out as economic pressures weigh on the weaker companies. Now, the startup funding winter is already here and expected to intensify further. With the valuations volatile, well, deal closure could be a challenge, while private equity braces up for some value buying in the next year.
All right, that's all that took place on Deal Street in 2022. Let's take a short break now. But when we come back, Ukrainian President Zelensky has visited the United States for his first overseas visit since the beginning of the Ukraine war. More on that story after this short break. All right, that's all the time we have on Business Lunch this afternoon. But keep it with CNBC TV 18. Midcap Radar comes up next.